Stock markets around the world are recovering some of their losses after Monday's sharp sell-off sparked by the worsening coronavirus outbreak. Authorities have confirmed nearly 80,000 infections worldwide and around 2,700 deaths. Most of the cases have been in China, but it's spread to at least 36 other nations. Switzerland has reported its first case, and a hotel on Spain's Canary Islands is in lockdown after a doctor visiting the hotel tested positive for the strain. Meanwhile, at least 7 people have died in Italy and nearly 300 have been infected, making it the worst affected part of Europe. In Iran, the country's deputy health minister and an MP have confirmed they also have the virus, which has killed at least 15 Iranians. The World Health Organization is now calling on governments to step up their preparations so they can respond quickly if and when COVID-19 enters their borders.
It's one of these scenarios which we have been warning against for a couple of weeks already, that countries have to be prepared for the virus literally knocking at their door. And medical authorities have to be ready. Medical staff has to be trained, and there needs to be the protective measures for the population and the medical authorities at the same time. But yes, preventing further transmission would be important.
Well, the worst affected country outside of China is South Korea. Several cities there have been transformed into ghost towns as residents stay indoors to protect themselves. That's raising worries over the disease's economic impact. Meanwhile, factories across China are trying to resume production. But as Sibel Karkus reports, it may not be enough to offset a dip in growth.
For the first time in more than a decade, South Korea has declared a red alert. Over the past week, the country has experienced a sharp rise in coronavirus infections.
The situation is very grave, and therefore the declaration of a special disaster zone is not enough. The government has deployed military and police officers and activated a full-scale national support system to prevent the spread of COVID-19 in and out of the region.
The majority of cases have been linked to gatherings of thousands of members of a minor religious group in the city of Daegu, southeast of Seoul. Fear of contagion has brought Daegu to a standstill, with the exception of long queues at shops selling masks. Despite lining up for hours, many returned empty-handed.
They need to come up with a solution. This is basically letting the unlucky people die.
In the capital Seoul, public spaces have been disinfected, several events cancelled, and parliament sessions postponed. To offset any impact on Asia's fourth largest economy, the government has suggested drafting an additional budget to already existing emergency funds. China, meanwhile, is trying to get back to business after the epidemic triggered a national shutdown that has slowed down an already sluggish economy. Small and medium-sized businesses account for more than half of China's economy. While 60% of these firms risk running out of cash in the next 2 months, bigger factories have resumed some of their operations.
We have more than 80% staff back to work, which can support production and meet the demand from clients.
But as demand remains low during the outbreak and supply chains disrupted, output at this car seat manufacturer has been cut to 30%. Beijing has allocated $14 billion to help cushion the epidemic's impact on the economy, which analysts predict will grow 5.4% this year, the slowest pace in 3 decades. As scientists worldwide search for a cure to the fast-spreading virus, the US is seeking $2.5 billion in funds, partly to develop vaccines. Some politicians say the Trump administration's funding request is inadequate, considering the scale of one of the most serious world health crises in decades. Sibel Karkus, TRT World.
Well, for more, let's go to Dimitrios Tsomocos, who joins us now from the UK. He's a professor of financial economics at Said Business School and St Edmund Hall at the University of Oxford. Welcome to Money Talks, Dimitrios. Now, let's look at financial markets first. On Monday, we saw a sharp sell-off around the world. Wall Street fell to a near 2-year low. We saw European stocks take a hard hit as well. How long do you expect investors on the stock markets more fearful about this coronavirus epidemic?
Evidently, the effect and the spreading of the virus has not only an economic effect, but also a financial effect. It's not only the Nasdaq, it's not only the drop of the airlines, share prices. More importantly is what's happening in Italy and what may potentially happen to the international trade flows for imports towards China. In particular, the car industry is in a dire danger, as well as the tourist industry. Because as we know, the imports for the European Union the exports for the European Union to China are a main component of the European Union's growth rate. Thereby, the economic effects as the virus is spreading may be considered. However, the main threat is not only the economic effect, but also the financial risks, besides the direct impact on the stock indices. There is also a salient impact of the $500 million pandemic derivatives, pandemic bonds that were issued by the World Bank. And basically, they were a scheme that was introduced by the World Bank in order to finance crises of that kind. These pandemic derivatives, that they are about, for better or worse, to mature in July 2020, they have tranches that will be triggered depending on how fast a pandemic spreads international borders. For example, the tranche B of these bonds, and we're talking about $500 million bonds, may be triggered and they may cause a payout, namely a decrease in the nominal value that the bondholders will receive if there are 20 or more fatalities outside China. And you realize that this may pose a very substantial problem to the international financial markets, and moreover, it introduces a moral hazard issue between the World Health Organization and financial markets.
Interesting. Now, the World Health Organization has for now said that it hasn't reached pandemic proportions. Do you think investors are foreshadowing that a pandemic is on the way?
Well, that's definitely a medical issue and an issue that we all hope that we're going to avoid. However, we're very close at the point when the payout will be called, and consequently, the funds will be used in order to contain the negative repercussions and the negative impact of the virus. However, this may destabilize the bond markets because the bondholders will lose, and this would benefit the World Health Organization in terms of cash. And that's where the danger of systemic risk from financial derivatives is lying.
Okay, Dimitrios Tsomocos, we'll have to leave it there, but thank you so much for your analysis on our program.